Hey friends, welcome back to the channel. Today, we're diving into a hot topic that's been buzzing in the investing world. Should you buy Frasers Centrepoint Trust, FCT stock at $2.20? Many investors believe that REITs are safe bets for steady income, but they often struggle with questions like, is the dividend yield sustainable? Are the risks worth it? And most importantly, is now the right time to buy? Here's the twist. While some might hesitate due to rising interest rates or retail sector challenges, FCT has a unique edge that makes it stand out. With its suburban mall portfolio and attractive dividend yield, this stock could be a smart addition to your portfolio. But is it really worth $2.20? I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers, with over 768,000 reads and 53,000 likes. I've produced over 700 videos with more than 300,000 watch hours as of December 2024. I also focus on regional and world economy topics. In this video, we'll break down FCT's fundamentals, dividend performance, growth prospects, and risks to help you decide whether it's a buy at $2.20. Stick around till the end for actionable insights and my verdict. Point 1. Dividend yield, a reliable income stream. Let's start with one of FCT's biggest attractions, its dividend yield. At 5.52%, FCT offers a payout that's higher than most REITs in Singapore. For context, the bottom 25% of dividend payers in Singapore average just 2.74%. Imagine this. You invest $10,000 in FCT today, it's $2 per share. That translates to an annual dividend income of about $552, a solid passive income stream for your portfolio. But is this yield sustainable? FCT's payout ratio is 96%, meaning it distributes nearly all its earnings as dividends. While this leaves little room for growth unless earnings increase, FCT has maintained stable payouts over the years thanks to its focus on suburban malls offering necessity-based retail like groceries and food services. These properties tend to generate consistent rental income even during economic downturns. Point 2. Portfolio strength. Suburban malls dominate. Now let's talk about what sets FCT apart, its portfolio of suburban malls. These malls are strategically located near residential areas and transport hubs, ensuring steady foot traffic from local shoppers. Here's an analogy. Think of suburban malls as neighborhood coffee shops. They're always busy because people rely on them for daily essentials like groceries or quick meals. FCT owns 10 retail malls and an office building in Singapore, including Northpoint City and Causeway Point, two properties that contribute about 70% of its net property income. This dominance in northern Singapore gives FCT strong negotiating power with tenants. In addition to stable occupancy rates hovering around 99%, FCT has been actively enhancing its assets through initiatives like upgrading Tampines 1, a move expected to boost rental income by 8%. These efforts ensure long-term resilience in a competitive retail market. Point 3. Valuation. Is $2.20 fairly priced? At $2.18 per share, FCT trades close to its analyst target price of $2.20, a sign that it's fairly valued but not undervalued. Its price-to-earnings ratio stands at 19.82, which aligns with other stable REITs. Let's simplify this. Imagine buying a car that's priced exactly at market value. Not overpriced, but not a steal either. That's where FCT stands right now. Technical analysis shows positive signals from moving averages, but also flags an overbought RSI level of 81, indicating potential short-term corrections. If you're looking for bargains or significant capital gains, this stock might not fit the bill at current levels. However, for steady income investors seeking stability, it could be a solid pick. Point 4. Risks, interest rates, and retail evolution. No investment comes without risks, and FCT is no exception. First up, interest rate sensitivity. Like all REITs, FCT faces higher borrowing costs when interest rates rise, a challenge exacerbated by recent Federal Reserve hikes. Second, retail sector evolution. As e-commerce grows and consumer behavior shifts, traditional malls face increasing pressure to adapt. While suburban malls are somewhat insulated due to their focus on daily necessities, long-term risks remain. Lastly, concentration risk. With two properties contributing most of its income, Northpoint City and Causeway Point. Any downturn in these areas could significantly impact earnings. How do you weigh these risks against potential rewards? Point 5. Growth prospects. Steady but limited, finally. Let's look at growth potential. FCT has been expanding through acquisitions like Nex, 25% stake, and Waterway Point, 50% stake. These moves strengthen its foothold in Singapore's suburban retail market while enhancing portfolio quality. However, growth remains modest due to high payout ratios and limited room for reinvestment. For investors seeking explosive growth opportunities, this may not be ideal, but for those prioritizing steady returns, it fits well. So there you have it. Frasers Centrepoint Trust offers reliable dividends and a resilient portfolio of suburban malls, but comes with risks tied to interest rates and evolving retail trends. To summarize, dividend yield, attractive at 5.52%, great for passive income. Portfolio strength, dominates suburban retail space with high occupancy rates. Valuation, fairly priced, that's $2.20 but not undervalued. Risks, sensitive to interest rates and concentrated income sources. Growth, steady but limited due to high payout ratios. If you're an income-focused investor looking for stability in your portfolio, FCT could be worth considering at $2.20, especially if you buy before April 2nd to secure the next dividend payout. What do you think? Let me know in the comments below if you'd add FCT to your portfolio or pass on this opportunity. Don't forget to like this video and subscribe if you found value here. It really helps the channel grow. And check out my video on top dividend stocks in Singapore next for more investing ideas. Until next time, keep learning, keep growing your wealth.